Good evening, everyone. My name is Vinita Nair. I am senior partner from Vinod Kothari and Company. And this video is to discuss about the RPT compliances to be done by subsidiaries of listed entity. And we all understand that the revised framework for related party transaction was already made effective from April 1st, 2022. And it has already been more than 6 months that has elapsed under the revised framework. And now company would be in the process of reporting the transactions undertaken during the half year. And therefore, this is the stage when the listed parent entities would be collating the information relating to RPTs from the subsidiaries for reporting onward to the stock exchanges. And hence, it becomes relevant to understand what are the various obligations for a subsidiary of a listed entity under the revised RPT framework. So, for proceeding on the actionables, we need to quickly discuss upon this relevance of group level governance. The concept of group level governance is not new. It was already discussed in the Uday Kota committee report and thereafter it was also discussed in a SEBI circular of 2018, wherein this was mandated for listed entities that had large number of unlisted subsidiaries. So we all understand that it may be possible that listed entity may be merely a holding entity and the actual business or revenue may lie in the subsidiaries, and therefore the subsidiaries may become more significant than the listed entity itself. And in those cases, group governance becomes very important, and related party transaction being an important part of or a critical aspect of corporate governance is also relevant while ensuring group level governance. Now, the SEBI circular of 2018 had cast the responsibility on the board of directors of the listed parent to ascertain whether they would want to have a group governance unit or a group governance policy or a group governance committee. And basis the decision which each of these entities must have taken back then in 2018, they must have proceeded likewise. But in our view, this is the correct time to revisit in view of the amended RPT framework as to whether the company still needs to implement any kind of group level governance. In our view, this becomes very critical because if there is no orchestration of the implementation of revised RPT framework from the parent level entity across the subsidiaries, then ensuring compliance with the framework may become very difficult. It is quite likely that each subsidiaries may follow their own interpretations when it comes to defining what is in ordinary course of business, what would be considering on an arm's length basis, how a material modification to an RPT would be determined. So if every entity is left to frame their own tunes, then there will not be a synchronous song which will result out of it. And therefore, there is a need for orchestration from the listed entity level, where some kind of instruction or common guidance should flow across the subsidiaries in order to enable the subsidiaries to comply with the revised RPT framework. When we talk about the revised RPT framework, we intend to refer to the definition of related party, which stands amended under the listing regulations, as well as the definition of related party transactions. And as you can see on the screen, if reproduce the definition under Companies Act as well as an LODR regulation. So a subsidiary, so long it continues to be an unlisted subsidiary, will only be required to comply with Companies Act 2013 in order to identify the related parties. Of course, accounting standards would be relevant, but that is only to disclose the transaction in the financial statements. But for the purpose of approval from an RPT, for the RPT transactions, it will rely on the list framed in accordance with the definition of Companies Act. But LODR regulations, the definition of related party is wider because it includes the definition of related party under Companies Act as well as the applicable accounting standard. And additionally, the promoter and promoter group, any entity belonging to any person or entity belonging to promoter group of the listed entity will also be a related party. Similarly, any person holding substantial shareholding will also be deemed to be a related party. So there is a definition of RP under LODR which is applicable to the listed entity. But to what extent will this apply to the subsidiary? Now, the reason to identify the list of related parties by the subsidiary is, as we discussed, the definition of RPT. Before that, if we look at the definition of related party under Ind AS 24, we understand that there are two parts. One is to identify the individuals as a related party, which is given under para 9A. And then we have the criteria to identify entities as related parties under para 9B. The manner of identifying RPs under AS 18 was quite different because the clauses were different as compared to Ind AS 24. Now, interpretation of RP, how should the subsidiary identify its own related party? Will it be governed by the law applicable to itself, or it will be governed by the law applicable to the listed parent? In our view, here the requirement under law is to identify the related parties and track the transactions, track cross-related party transactions, which I'll be explaining in the next slide. But for the purpose of identifying the related parties, the subsidiary will have to rely on the law which is applicable to that respective entity. For example, if the subsidiary itself is an equity listed entity, then the definition under listing regulations will apply to the said subsidiary. If the subsidiary itself is a high value debt listed entity, then the definition again under LODR under 21ZC will apply to the said HVDLE entity. If it's a pure debt listed entity or an unlisted entity, in that case, the definition under Companies Act under section 2 subsection 76 will be referred for identifying the related parties. If it's a foreign entity, then of course it should be as per the law which is applicable, the basis the host country. Now, what will happen in case of LLPs? Because it's quite likely that you may have a subsidiary in the form of an LLP being a body corporate, but there is no parallel definition of related party under LLP Act. So in those cases, the company will have to internally determine as to which all parties would it want to identify as related parties. Say, for example, at least the partners to the LLPs should be regarded as RP in order to ensure that there are no such transactions where there is a possibility of a conflict of interest. If we come to the definition of related party transaction, because the framework which has been implemented is pertaining to related party transaction, but there is no specific definition of related party transaction under Companies Act. Section 188 simply provides a list of transactions wherein approval of board and shareholders would be required if it is not an ordinary course or not an arm's length. But again, section 177, which deals with all related party transactions and subsequent modifications, will require approval of the audit committee. Now, in this case, again, it's not limited to the transactions covered under 188. It will cover all the transactions, even the ones which are not covered under 188. For example, financial transactions where you're giving loan or extending guarantee, or there is an equity investment, or the transactions covered under 188 for selling of goods, rendering or availing of services, etc. Any kind of transaction with related party identified under Companies Act will be required to be approved under section 177. The definition of RPT under listing regulations is again broader, wherein any transfer of resource service obligation between the listed entity, and it's not limited to the transactions between the listed entity and its RP. So under Companies Act, any transfer of resource service obligation between the company and its related parties under section 2 subsection 76 will become the framework for the RPTs. But under LODR, your RPTs will comprise of transactions between the listed entity and its own related parties, between the listed entity and related parties of the subsidiaries. Similarly, between the subsidiaries and its own related parties, between the subsidiaries and related parties of the listed entity, and between the subsidiaries and RPs of the other subsidiaries. So basically, the definition indicates where on one side you have the listed entity or any of its subsidiary, and on the other side you have the related party of the listed entity or any of its subsidiary to define the ambit of related party transactions. This is the definition which is currently effective. Next year onwards, there will be a further addition wherein transactions with unrelated parties, where the purpose and effect of the transaction is to benefit a related party, will also be regarded as a related party transaction. So therefore, the definition of related party transaction post April 2022 has become so wide that there is a requirement for implementation of this framework at the subsidiary level to be able to identify the transactions with its own related parties, also with the related parties of other subsidiaries, fellow subsidiaries, or related party of the listed parent. So like we discussed, there are 5 possible transactions, uh, and out of which 4 possible transactions would involve a subsidiary, because the RPTs of parent listed entities with RPs of subsidiaries, or the RPTs of subsidiaries with its own related parties, or of the subsidiaries with RPs of the parent entity, or with other RPs of the other subsidiaries. And therefore, there is a requirement for control, because if there are so many combinations which fall within the ambit of related party transactions, how is it that the subsidiaries will be able to identify this, route it through the approval mechanism which are applicable, and then report it to the parent entity for onward disclosure to the stock exchanges? So there are several actionables at the subsidiaries level under the revised framework. And therefore, there are controls which are required in terms of determination of related parties on the approval mechanism, what would be the information flow, and lastly, also at the policy level, where there is any requirement to frame a policy or an SOP at the subsidiary level to ensure these compliances. So if we have to quickly discuss on the overview of the systems and controls which are required at subsidiary levels, firstly will be identification of related parties and mutually sharing this list, because the ambit of related party transaction is not just limited to your own RPs. It will now extend to transactions with related parties of the parent listed entity and related parties of other subsidiaries. So therefore, the respective subsidiary will have to frame its own list of related parties based on the law applicable to that entity and exchange it with the parent entity and other subsidiaries. Likewise, obtain the list of related parties from the parent entity and other subsidiaries. Now, this list may not be a static list. It will definitely be dynamic, because each time you appoint a new director or there is a new KMP, the list will undergo revision. So therefore, there are sufficient controls to be in place as to what will be the periodicity to exchange this information. In case there is any change, it has to be done on a prompt basis or an ad hoc basis. And otherwise, there can be a periodic review of the list of RPs. Second is, once you have the list in place, the subsidiaries will have to then identify and track what all transactions are ongoing with these entities, because all of these, if there are any transactions with these parties, those are potential related party transaction. And if there is a transaction, there may be an approval requirement, a disclosure requirement, and therefore it's necessary to track the transactions with these RP lists that you have obtained, your own related parties, other subsidiaries related parties, and that of the parent entity. Now, thereafter, you have to have approval systems, because there may be certain transactions which you will have to take to your own audit committee. Say under Companies Act, Section 177, all transactions with your related parties needs to have approval from the audit committee. But it's not necessary with respect to other RPs. So for example, there may be a related party of other subsidiary or your parent listed entity, which is not your related party as per the law applicable to you. So in those cases, you may not take it to your own audit committee. But as per listing regulations, if it's a significant transaction, which means if the transaction with that related party amounts to 10% or more of the consolidated turnover of the listed parent listed entity, in that case, it will require prior approval of the audit committee of the listed parent. Now, in order to obtain this prior approval of the audit committee of listed parent, ideally it has to be routed through your own audit committee, because if your own audit committee is not approving the same, there is no point in taking it to the parent entity and having it approved. So therefore, identifying the significant transactions and routing these additional transactions to your audit committee, and through your audit committee to the audit committee of the listed parent, becomes necessary. In case the subsidiary itself is equity listed or a high value debt listed entity, where it is itself required to comply with corporate governance norms, and it itself has its own audit committee where 2/3 of the members comprise of independent directors, then in that case, this process is not needed. But otherwise, if it's an unlisted subsidiary, or if it's a listed subsidiary which is not required to have audit committee, in those cases, the audit committee or the board, if there is no audit committee in the subsidiary, will have to approve these transactions before it goes to the audit committee of the parent entity for prior approval. Now, this threshold of 10% of consolidated turnover is only for this year. Next year, it will be a stricter threshold wherein if there is any transaction with either your own related party or the RP of the listed parent or the RP of other subsidiaries in excess of 10% or more of the standalone turnover of the subsidiary, in those cases, this will have to be routed through the audit committee of the parent entity for prior approval. And kindly appreciate that where there is a requirement for prior approval, and therefore this systems has to be in place so that you're able to identify the transactions and place it timely before the audit committee of the parent entity. As the listed parent is certifying or confirming on a quarterly basis to the stock exchanges that prior approval was obtained for all related party transaction. And in this certification, it's kind of also confirming that where there were any significant transactions on the part of the subsidiaries, those were also brought before the audit committee and prior approval was obtained. Similarly, if it's a material RPTs, first we spoke about significant RPT. Second, when we are talking about the requirement of approval from the shareholders of the listed parent, we are referring to the concept of material RPT. So if the quantum of RPT exceeds 10% or more of the consolidated turnover or rupees 1,000 crore, whichever is lower. So if the total transactions with one related parties during a financial year is beyond this threshold of either 1,000 crore or 10% of consolidated turnover, whichever is lower, in that case, that transaction will require prior approval of the shareholders of the listed parent. So the exception, of course, there are certain exceptions where the transaction is between entity and wholly owned subsidiaries or between two wholly owned subsidiaries. But if it is not fitting into the exception, there is a requirement of prior approval from the shareholders of the listed parent. So we all understand that it's not very easy for a listed entity to regularly convene audit committee meetings or regularly have shareholders meetings, and therefore where there is a requirement to obtain a prior approval from a particular committee or shareholders of the listed parent, there is a need for a proactive approach so that you have timely identification of those transactions and you're able to place it before the respective authority for prior approval. So material RPTs will have to be identified. Now here the question may arise as to whether aggregation will be done across the transactions with one RP by parent and subsidiaries. So for example, there is company A which is transacting with listed entity, listed parent for 500 crores. And then you have same entity A transacting with the subsidiaries, say for 800 crores. So individually the transaction is below 1,000 crore, and are we supposed to aggregate it because then it will amount to 1,300 crores? But that is not the requirement. The requirement of law is where you are comparing transaction between one entity and the RP. So if the transaction value of listed entity transacting with that particular RP and or the transaction of subsidiary with that particular RP individually exceeds 1,000 crore or 10% of consolidated turnover, then this will be identified as a material RPT and will require prior approval of the shareholders of the parent entity. Second point, whether aggregation will be done across transactions with one RP by respective entities. Yes, because with the same RP, you may have multiple transactions. There could be sale, there could be purchase, there could be financial transactions. So we are not looking at single transaction, we're looking at all the possible transactions with that related party during that particular financial year, and accordingly, we aggregate it to see if the thresholds for materiality is breached or not, and accordingly have the approval. Now, identifying material modification, this again becomes very important. Why? Because listing regulations provide that if there is any material modifications in those RPTs which have been approved by the audit committee or by the shareholders, then it will again require prior approval of the audit committee or shareholders. And what is the manner of determining this material modification is something left to the audit committee, which they can have it recorded or captured in the RPT policy. Now, the listed parent may have some threshold for material modification. It's not necessary that the same threshold may be relevant for the subsidiary as well, because it will depend on the size of the subsidiary. For example, listed entity keeps a threshold of say additional 500 crores change in existing transaction for at the parent entity level, but that may be too less or too large for the subsidiary depending on the size of the subsidiary. So therefore, it is relevant to determine the criteria for material modification looking at the subsidiary level, and this guidance has to therefore flow from the listed entity so that there is some parameters which are indicated basis which each of the subsidiaries can frame their own criteria for material modifications, and that will become the basis to again put up the transactions before the listed parent audit committee or shareholders in case there is any material modification. Now talking about information flow. So one is the information flow in relation to the list of RPs, which we just discussed, and thereafter the transactions, the flow of information for approvals, where if it's a significant transaction or if it's a material transaction, it has to go before the audit committee or shareholders of the listed parent. Additionally, at the end of every half year, you will also have to send a list of entire related party transactions, whether significant or insignificant, whether material or immaterial, all the transactions, related party transactions, to the listed parent for onward reporting to the stock exchange. Now, so what will be the periodicity of this reporting? What will be the format of reporting? What values would be reported when it is coming from two subsidiaries? All of this will be required to be addressed because this information will be collated by the listed parent and accordingly submitted onwards to the stock exchange. If the subsidiary itself is an equity listed entity or a high value debt listed entity, then the subsidiary itself will also be required to submit this information under 23 sub regulation 9 as a half yearly disclosure for the RPT transaction. And that will not absolve it from reporting those same transactions to the parent entity, because parent entity will also report all the related party transactions to the stock exchange. So lastly, we come to the point of policy for RPT controls. We understand there is a lot of combinations, there are a lot of information exchange that is to happen. There are approval mechanisms, and therefore there has to be proper controls which may be laid down either in the form of a policy or in the form of an SOP, because every entity under Companies Act is not required to frame a related party transaction policy. It is only mandatory in case of an equity listed entity. But an unlisted subsidiary also, since it has so many actionables when it comes to the RPT framework, there is a need to have that kind of policy at the subsidiary level as well. And that again brings us to a very important question as to, since there are so many obligations on the part of the subsidiary, basis which there is a reporting being done by the listed parent, what if there is some miss in identifying some related party, or if reporting some related party transaction, such that the required approval from the audit committee or the shareholders could not be ensured. So therefore, the listed parent should also ponder on this thought whether any kind of confirmation or certification should be obtained from the subsidiary to give that comfort that all the necessary steps which were required for identifying the RPs and the RPTs, ensuring the approval mechanisms and reporting it back to the listed parent has been ensured or not. So this was the short video to discuss, and we understand that there are a lot of actionables for the subsidiaries to be ensured, and therefore it becomes relevant for the listed parent entity to check at group level on the level of compliances, the level of sensitization, and where needed, it will have to standardize and put in place a detailed policy or an SOP so that it ensures that orchestration of implementation of this RPT framework at group level and thereby ensure that group level oversight. Thank you.